Hello everyone. Um, yeah, I welcome you officially to 2026. I wish you a profitable year as always. This is PSA Investments, and if you are not one of us already, this is an opportunity for you to actually join the community of people who actually take charge of their finances for this year. So in this video, we are going to be looking at the investment outlook for year 2026. What if I told you that smart investors who understand macro trend will outperform everyone else in 2026? Your salary isn't too small, it's your investment strategies that need upgrading. In this video, we'll break down the investment outlook for 2026, the opportunities available to Nigerians, and how to choose the right investment option for your goals. So, why does this matter? Inflation outlook in this year actually is trending downwards, and we have to look at the effect of these macroeconomic variables on investment position and the speculations that we are expecting for this year in the financial market. So, what are the macroeconomic indicators that we are going to be taking a look at in this video? The first is inflation, which is trending lower. Then we also have interest rate stabilization, exchange rate stabilization, and also the GDP growth, which is above 4% currently. So, inflation outlook. Nigerian inflation is expected to moderate significantly in 2026. According to the Central Bank of Nigeria, inflation is projected to average around 12.9%, down from over 20% in 2025, driven by lower food cost and energy costs and sustained policy coordination. Lower inflation reduces pressure on consumer prices and improves real return on investment. So for investors, this means fixed income will yield that retain more value in real time and improve corporate profit margin. Then the other variable we are going to be considering is interest rates. And interest rates have ground lower recently, especially in 2025 towards November, December, which is the first time cut that CBN will be having over years. So interest rates have actually been as a result of the inflation that was trending upward in previous years. But since it's stabilizing and it's coming down gradually, then the central bank actually took the step to reduce the interest rate down from 27.5% to 27% in 2025, which will also take effect in 2026, depending whether it will be further reduced or not. So what's is the next item here. We have the exchange rate, which is another macroeconomic variable that affects investment decision in Nigeria. Exchange rate have actually been stabilizing over the time, with you know rates falling around 1,400, but as we have it, the average there is around 1,445. Though those who are strategic enough or who want to invest in international market, they should also take cognizance of this variable, as it could affect the return end in real time depending on the currency exchange. For some investors, they actually try to hedge their investment in foreign currency. But this time around, I will not actually advise that, since the Nigeria currency is actually gaining value over the dollar. And this can be said not just because Nigerian naira is performing very well, but we can also see increase in inflation in the United States, which also affects the value of their dollar. That gave Nigerian naira edge over the dollar. Then we also look at the GDP growth. GDP growth in Nigeria is actually trending upward, and as we can see it, we have stabilized growth about 4%, and the projected growth also by the CBN for 2026 is also about around 4.49%, which is actually a good outlook for economic performance. Then let's look at the policy structural change that actually took place. In Nigeria, 2025, the federal government actually gave out a new tax policy system, which is known as the unified tax system. We also have several reform in the banking sectors, which make bank go out to secure more capitalization, which is the bank capitalization. Then we also have the capital market reform also, which also affects the investment sentiment in Nigeria and outlook of investment in Nigeria. Let's take a look at these investment opportunities, because the essence of this video is actually to um, expose viewers on what are those options that are available and are enticing enough to investors in Nigeria. Though before we go into it, I would like to classify investors into two aspects. One, which is the passive investors, and the active investors. I will just say the passive investors are those that they don't take too much risks. They are about risk averse. So mostly they are advised to go for fixed income earnings as the rate stabilizes over time. And as we can see it, since the interest rate on earning is around 27%, then the interest rate that can be earned on fixed income should be still remain at around 16%. That's if the federal government do not reduce the rate. Though reducing the rate could also affect the real return that is earned over time, or the strategy that is being developed by an investor. We also have several investment opportunities such as equity. We also have the real sector, infrastructure, and export-led sectors. Fortunately for us, last year, the equity market alone generates about 51% on an average, which is a very impressive return. Following the second high that we have, because we've already experienced about 70% return average on the equity market. But last year, 2025, which equities actually outperform, we have an average of 51%. So we expect, based on analysis, that investment outlook also still follow this process. It means equity should also remain significantly on the increase side or 2026. And what are those factors that could actually cause it? The reform in the banking sector, the unified taxing system, reduction in the inflation rates, and also we also have the interest rate stabilization. So the fixed income. What can we say about the fixed income? Fixed income assets remain essential, especially if inflation continues to decline. Government securities such as treasury bill, high quality corporate bond offer steady return with relatively low risks. And it's always best for capital preservation. That is when I was talking about the passive investors, those who do not really take too much of risks, they just want to preserve their capital. This is the best option for them, and for conservative investors also. Then we look at the equity markets, and here we already have the sectors that we are going to be looking into specifically for this year, and encouraging based on recommendation. We have the banking sectors due to their recapitalization. Most of these banks are actually going for expansion in Pan Africa. Then we also have the energy sector and the telecommunication sector, and also the consumer goods. So equities are actually attractive when the economy is growing and inflation is easing. All right, look at sectors like the banking and financial, benefiting from lending growth since they already have increased capital base. Then we also look at the telecoms and consumer goods, driven by demand resilience. They also have the energy and oil service, benefiting from higher output. Bank capitalizing and expanding balance sheets can support lending and profit growth this year. So what are the benefits that equity have? Reduction in interest rate. This will actually encourage borrowing, and borrowing at the same time is also tax deductible, which will leave equity holders with more profit to be distributed. So interest rates and inflation rates coming down actually is beneficial to the equity holder. So we also have the real real estate investment. In real estate investment, we can actually look at one investment opportunity that government established, which is government intervention in real estate. You can look it up. It is MRIEF list on NGX. It's actually selling at 100 naira per unit, and it's a source of finance that government actually use or introduced in order to encourage um, house ownership for Nigerians, because it's part of the focus of this government that we have currently. So it's also one of the investment opportunities that you can look into in the real estate. We also have export-oriented sectors, which you can actually look into. So this investment opportunity in the equity market are encouraged to be looked into, and you perform further analysis in order to get quality information on which particularly are you going to opt for. So we have factors that determine investments in Nigeria. So now, what are those factors you have to look into before going ahead with choosing any investment option? Because we already mentioned the investment option and some of the benefits, which we have mentioned: the fixed income, we have mentioned the equities, and we have also mentioned the real estate and export-led income. So how to select an investment? How do you select? Depending on your investment goal, we have the risks and return. Always compare expected return against risks and inflation adjustments. We also have the liquidity. The liquidity in terms of how easy can you trade them and get back your money. Can you exist if needed? These are questions you should ask yourself. And stock and ETFs usually offer better liquidity than long-term instruments. We also have the other factor, which is the time horizon. This time horizon determine the duration of the investment, whether short-term savings or long-term wealth building. And also we also have macro alignment, which you have to choose assets aligned with macro trend, such as inflation trend, interest rate, and sector growth momentum. So that being said, we also have um, asset allocation sample that we provide. This is for a conservative investor, and I can also say conservative investor can be referred to as the passive investor, those who do not want to take too much risk or fear the risk of exposing their capital to depreciation. So what are those? What are these figures that we have here? We have the 50, 30, 20 formation, and this 50, 30 formation include the fixed income taking the 50% of the invested fund, and equities taking the 30% of the invested fund, while real sector take 20% of the invested fund. So this is for a conservative investor. And we also have balanced portfolio, which is just for those that do not want to take too much risk and at the same time they are not risk averse. So we have the formation here for them, which is 35 for fixed income, 40 for equities, and 25 for real sector and other alternatives. We also have for the growth mindset, that is for the active investor. Here we have 20% going into fixed income earning, whereas 50% is for equities and 30% is for alternative. So in this year, 2026, as we have said, that is going to be a very beautiful year for equities holder. That is, if you know how to plan your strategy, you are going to actually benefit a lot from the equity market. Though, if you should know me before, you believe that I'm a fan of equity, so I'm not actually advising you to do that. If you are just planning on following me, you should do your own analysis and make your own decision. So adjust based on your risk tolerance. So I will leave you with some keynotes, which is consistency beats timing. And at the same time, not just consistency beats timing, you have to make sure that you enter the market at the right time and not when things are surging up, then you decide to take a position in it. You might actually, find yourself to be blamed at that moment. So you have to study the market, study the variables that you mentioned above, and determine, plan on when best you enter the market. And once you enter the market, you should also have an exit plan. whether it is 30% on your investment that you planning to make, always have an exit plan. Or if it is for the fact that you want to retain your investment for about 18 months or 24 months period, you should also have the plan at the back of your mind, not just getting into the capital market for investing sake. Um, Also, you should understand risk management. You don't just put 100% of your wealth or your portfolio into equity, because the market always wins. And make sure you plan strategically. So that is it for 2026. And you should always follow, and we'll share more updates about the occurrence. We'll share recommendations about stocks that you can actually look into, though there are recommendations you can look into in order to multiply your earnings. Although I'm not advocating for any shares or equity market, I'm just saying, based on my own perspective and my own interest, I am an equity lover, so I love the stock market. Yeah, I just buy shares and keep it for some time. I'm actually an active investor, so I give my investments time to grow. Then I also have my exit plan. So you should also take note of the risks that you are trying to encounter in this. And I wish you a profitable year. This is PSA Investment. Tune in for more updates and follow our channel.